Well, we got word at the top of the hour, pending home sales dropping much larger than expected, falling 6.3% in April from March. Joining us here at Post 9 is Compass co-founder and CEO Robert Reffkin. What are you seeing in activity? Does it jibe with some of the numbers we're getting in April? Really weak on pending home sales, but better on new home sales.
So pendings are down 6% year over year, but that's really because the noise was up in April. I expect in May that we'll see a reversal of that trend. It's actually a great time to be a buyer. You have inventory at 5-year highs. The inventory over the year has been flat year over year in terms of price, while wages growth has gone up 4%. Mortgage rates are 50 basis points less than they were this time last year. So affordability
but they're still
is actually
really high.
They are still just under 7%. Yeah. We would like them to be in the low 6s. I would love for it to be in the high 5s. I think when you get to high 5s, you'll be back at mid-cycle transaction levels. But overall, it's a better time to be a buyer than it was last year. You can't buy what's not for sale, and there's a lot more for sale.
Why? What's driving that inventory surge?
What's driving the inventory, it's really the southern states. And so you have 9 states with more inventory than there was in the pre-pandemic period. And all those states have prices that are actually flattened down year over year. Those states include Georgia, they include Texas, they include Florida. These are states where they used to get a lot of migration from the north and the northeast, where the migration is not moving down as much as it used to in the past.
You said April was full of noise. I mean, the tariffs, the market falling, and you expect May to rebound? You're seeing the sentiment swing?
Yeah, we can see in the data, we can see it in the company, that the pendings in May will be up year over year.
And so, and the idea there is what? Does it track the stock market? Does it track the headlines?
Consumer sentiment's up currently versus in April, and that's because tariffs. The less noise in the stock market, the less noise in tariffs, the more people feel comfortable making the most important big purchase they make in their lives.
There's some good data out of Reffkin today about the spread between the number of sellers and the number of buyers. You got to go back 12 years or so to get that kind of difference. Does that mean prices are going down?
It's more likely that they go down than up in the second half of the year, but I would expect them to continue to be flat. But recognize flat is actually down in real terms, because if inflation is up 3% and you're flat, then you're actually down.
Right. Why aren't you expecting prices to fall more?
I still think that I would expect a lot more buyers to come off the sidelines. Yeah, it's really been a must-move market for the last 4 years now, where the only people that had to move. We call it the 5 Ds.
5 Ds, yes, of course.
Diapers, diplomas, diamonds, divorce, death. But now we're seeing that pent-up demand, speaking with our agents more and getting ready to purchase.
Except qualifying income for a starter home just keeps soaring. It's over $101,000, $102,000. I mean, don't prices need to come down for more people to simply be able to afford it?
Yeah, the more prices come down, the better. But again, if it's flat, it is down when you have inflation at 3% and wages going up 4%. And so we're starting to see some relief. And mortgage rates are down 50 basis points. The mortgage payment is lower than it was a year ago. Mortgage rates are the key. The most essential portion of
we always come back to the same basic premise. Mortgage rates are the key.
Yeah.
And they haven't budged much on the downside.
No.
As expected, as the Fed started cutting.
They haven't budged much, but remember, they were as high as 8% about a year and a half ago, just for a little bit, and they were 7.5% a year ago, and so now they're just under 7, even by just a few basis points.
like 6.93, 6.98.
Yeah, you'll take it under.
Yeah.
What hottest market right now is?
Say the hottest market right now is, I would say, the Bay Area. The Bay Area still there's a lot of momentum there. A lot of the tech stocks, a lot of the equity markets for the NASDAQ are still strong year over year. It's in the Bay Area.
Okay, Robert. Thank you very much. Always good to get color from you. Robert Reffkin of Compass.
Still to come this morning.